Now, let's look at a couple other big ones out there. The no tax on tips. And this one's going to be indexed annually or for inflation. And what it does from 2025 to 2028, it creates an above the line deduction for qualified tips. So, and it goes all the way up to $25,000 for an individual. This is a big deal. Now, it's not going to help really high income earners again. So it's not designed for them. It's designed for the average person and low income earners. Because really, once you get above 150,000, it starts phasing out. Here's another one. This kind of works the same way. The no tax on overtime, again, indexed annually for inflation. This one starts 2025, works on until 2028, and it works very similarly to the no tax on tips. So this is all designed to try to put more money in the average person's pocket and allow them to hopefully get more money back into the economy and boost the economy. Now, many people might be asking, what about President Trump's pledge to eliminate tax on Social Security income? Well, I'm sure everybody knows by now that it didn't quite happen the way he wanted it to. Now, the question is why? Well, it really went to the fact that he knew that he did not have enough votes in the Senate and the House to be able to get a two-thirds vote to revamp the full tax bill. So what did they have to do? They had to go through a budget reconciliation, which has rules, and those rules prohibit significant changes to Social Security programs. So that's why it didn't go through the way President Trump wanted it to, but there was some reconciliation done. And when you look at it, it's actually still going to be a benefit for those who are taking Social Security over age 65. And what it does is it brings in a new additional standard deduction bonus of $6,000 for anybody 65 years and older. Now, there is some qualifications on this. So let's go through a few things. First of all, relative to the provision, there is a phase out to this. So if you're a single person making over 75 or a couple over 150, it does start phasing out at those levels. So the no tax on Social Security income really is more of an enhanced deduction. Again, it's going to run from 2025 all the way through to 2028, and it is going to be a supplemental deduction on top of deductions we already have. So let's kind of go into that. First of all, for 2025, single filers 65 years or older, they currently have a $2,000 deduction that they can take. And if you're a married couple, both over 65, it's going to be about $3,200, $1,600 apiece. Now, for example, the current standard deduction is $31,500, but these people get to add up to an extra $3,200 onto it, bringing them up to $34,700. Well, now let's look at it adding on this bonus. The way that works is when you're looking at a married couple, they still have that $31,500 deduction plus the $3,200, plus if they're both over 65, an additional $12,000. So now we're actually sheltering $46,700 in income. So that is going to bring down the income tax on a lot of people's 1040 returns. And if you've done any kind of tax mitigation with us, you're going to be able to see, in many cases, zero with your tax returns through that tax mitigation.